First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewiton, and Managing Editor of International Content, Emily Parker. Good morning, you two.
Good morning. How are you?
Good. I'm recovering, slowly getting better, slowly but surely. All right, and we're taking a look. Thank you. Thanks, Lawrence and Emily. All right, taking a look at Bitcoin. Bitcoin's still nearing record highs. Right now, trading at $56,993. It's up 1.5% over the past 24 hours. And the ETX Ether price right now trading at 1814, down slightly, about 1.5% over the past 24 hours, according to Trade Block Data, the most reliable reference price for institutions since 2014, with billions in assets under management benchmarked against it. Also, Emily, we have some news on the NFT front. We have this Beeple auction happening at Christie's, and it's getting pretty wild, isn't it?
Yes, it is. This is a perfect example of the NFT boom going on right now. This is the first NFT by Christie's. Bidding is now, I think, over $13 million happening today. And Beeple, the artist known as Beeple, will be on the show tomorrow to talk about this. So it's really exciting.
Excellent. You don't want to watch, you don't want to miss it, for sure. Very exciting to see how this auction goes. All right, and our first guest heads the largest crypto exchange in the world with 28 billion in daily trading volume. He pivots quickly, creating products as fast as the crypto space can invent them and moving jurisdictions faster than governments can ban him. Joining us now is Binance CEO Changpeng Zhao, better known as by his nickname CZ. Welcome, CZ.
Hello, guys. Yeah, thanks for having me. That was an interesting introduction.
Susie, you've been tweeting about making an announcement of an announcement. Can you share what this announcement might be? We'd love to know.
It's actually pretty hard. I think most people will guess it wrong, but it's going to come out in an hour, so we're going to see.
In an hour. Come on. All right.
Well, you're quite friend. You can do it here.
All right, so I'll tell you what it is not. It is not a product announcement, but it is a more of a regulatory side of things. Yeah.
Fascinating. Okay. All right. Well, speaking of which, Coinbase is creating a lot of buzz with its public offering at a $100 billion valuation. Does Binance want to go public or have any interest in going that direction?
No, we're right now we have no plans of going public. I think it's great for Coinbase to go public, especially at those kind of valuations, and I think that's really great for the industry. I think that opens up a lot of doors for a lot of companies, a lot of businesses in the industry, and we feel really happy for them. And but Binance, we're okay. We're not really short on funds. We're surviving okay, and we're growing very healthily and organically. So we don't have any plans for an IPO.
Do you think a 100 billion valuation is a fair valuation for Coinbase?
Oh yeah, I think it's low. I think they should be valued much higher. To be very frank, yeah.
Really? So, why? So why? And if you could put a valuation on Binance, where would that be?
I think for Binance it will be very subjective. I think for Coinbase, they pretty much have the majority of the U.S. market, and U.S. is a big market. And if you look at the future of finance, future of fintech, and I think Coinbase is going to be one of those instrumental companies in the space. And I think the valuation is quite low. Very honestly, I don't know what the Binance valuation is. I think in the U.S. we have much less users. Well, not we, but Binance US has much less users. But globally, we have slightly more users than Coinbase right now. But they're focused on the US. US is a very active market. So yeah, it's very hard to tell. I think US has the highest value of users per user on a per user basis. So I personally think the 100 billion valuation is very low for Coinbase.
So, hi, CZ. So speaking of Coinbase, Coinbase called out various exchanges, including Binance specifically, saying that certain exchanges were selling unregulated services to U.S. consumers seemingly without penalty. So how do you respond to that?
No, so for any new company, for any new internet business, when they first start, they will not have super strong geofencing, KYC, ML regulatory controls. But we actually enabled that very, very strong 2 years ago. And so we actually had very, very strong controls in terms of KYC, AML, geofencing, blocking US users, etc. To the point that we actually have a lot of non-US users who actually may travel to the US or may use a US VPN. They actually get wrongly blocked. So in addition to KYC and ML, we actually use a lot more than what the most regulatory agencies require. We actually do blockchain analysis on deposit and withdrawals. We look at mobile carriers even without knowing the phone number, even without knowing the location information. If you use the Binance app, we can actually get the carrier information. And there's only 4 carriers in the US. We use a number of other proprietary methods that we really can't disclose, but we actually go way above and beyond what the regulators require. So we actually have much stronger controls in this area. This is somewhat counter to popular perception of Binance because we started outside of the US. But I actually believe that we have the strongest KYC, AML, and geofencing technologies and policies in place. This is unfortunately a wrong perception, but we have by far the best KYC and ML controls.
Good morning or good evening, whatever it may be, CZ, where you are. So you're obviously on the largest exchange there. You're seeing all the flows. Tell us what's happening right now in the market as Bitcoin gets to near all-time highs. What do you think is driving it?
I mean, the market is just going crazy. So what people don't see is what most people see is just the price. But what we see is the actual amount of the number of users, and the amount of traffic they're pumping through Binance.com or any one of our services. And it's just, we're seeing all-time highs, record highs all over the place. So this is something that most people don't see. And on our side, we see that we're seeing record high user registrations, and we're seeing record high active number of users. So this is something that we're way past the 2017 high. We're way past even the last all-time high, even like 2 weeks ago. So from my perspective, we're still in the dip, and we haven't come up to the all-time high yet.
More whale activity on your exchange? More whales?
Sorry?
More whale activity on your exchange?
It's a bit of both. There's more whales, there's more institutional large players, there's also more retail guys. So it's like everything's increasing.
So just want to ask you quickly your opinion on the NFT boom going on right now. So we're seeing crazy amounts of money flying around for all sorts of art and collectibles. Is this a bubble? Does this have legs? Or are we just kind of seeing some reflection of, or some repeat of the ICO boom?
To be very honest, I think you can draw some parallels to the ICO boom, but this is the same as any new industry that you can relate to the ICOs, internet, whatever. But I think fundamentally in any new sector, any new industry, you will see when a new sector forms, we will see a lot of failures, and but at the same time, we will see a lot of really huge successes in this space. So I think majority of the NFTs will probably trend to zero because people will eventually lose interest. But at the same time, I think some of the really good, strong artists will keep their value, and the value will multiply by the magnitudes that if you evenly spread your investments, you're probably going to make a huge return. So I think on people specifically, I think he sold one for 6.6 million. Well, his artwork sold one for 6.6 million. He actually didn't pocket that himself. That was a second market sell. And the next one that he has is bidding for like $13 million or so, right? So that's just that's fantastic. So it is a new area. It is bound to be high risk, but we'll see. I don't know. I think as for any new sector, any new industry, there's going to be a lot of failures, but there's going to be some like really extreme successes as well.
So you're getting involved now in decentralized exchanges. You're making more of a push. in them. Where do you see decentralized exchanges in 3 years from now? How much of your market share will be decentralized versus centralized? And for the overall market, what will it look like?
To be very frank, I think in 3 years it's very hard to tell. But I would say honestly, in 30 years, there will be no centralized exchange. Everything will be decentralized. Everything will be running on a blockchain, and the speed will be super fast, super easy to use. And most people, everyday people, can hold their coins securely themselves with secure backups, etc. So I think 3 years, how far we get is a little bit tough to get. We will play by ear. We will choose what the users want to choose. So if in 3 years, if most of the users want to choose to use a centralized exchange, we'll continue to push that. If most of the users want to use a decentralized exchange, we will continue to push that. We have both offerings. But I think if you look at a longer time horizon, if you look at 30 years, everything will be decentralized.
At the same time, the BNB token is... Go ahead, Lawrence.
Well, I've got to ask.
At the same time, CZ...
Bit of a delay. You go, Christine.
Okay, CZ, at the same time, the BNB token is taking off on the Binance Smart Chain. You have your critics, though, who say that Binance Smart Chain is basically a centralized copycat of Ethereum. I wonder your response to that.
I think they're half right. Binance Smart Chain is a copycat of Ethereum. They're right about that part. But Binance Smart Chain is actually not centralized. This is one of the most common misconceptions about Binance Smart Chain. The fact that it has the Binance name helped it in the early days to get credibility and trustworthiness, but Binance Smart Chain is not controlled by Binance. I don't have any rights over it. I don't have any control over it. It's ran by it's actually developed by the community from the scratch, and it's also ran by 21 validators. And anyone who stake enough BNB or who can get enough users to delegate the BNB to their nodes can run a validator. So we don't have control over it. It's 100% open source. It is a public blockchain. So that's one of the big misconceptions about Binance Smart Chain. To the point, I was suggesting to some of the community members that we may want to rebrand it to not have the Binance word in it.
So speaking of the Binance name, of course, you just withdrew your lawsuit against Forbes, where they claimed that they insinuated that through a presentation that Binance may be trying to get around regulators in the U.S. Why did you drop the suit? And what's your feeling now about reporters and the crypto media these days?
So I think on this one, on the dropping of the suit, we just thought it was not worth our effort to pursue it. It's too much trouble, too much effort, and not for a lot of gains. We actually do have a very clear evidence that we actually rejected that proposal. So it was a third-party proposal that was presented to us. Anyone can send us a document. We actually have a email from myself to some of our lawyers saying we're not going to pursue that approach. We're not going to reject. We will reject that proposal. We are rejecting that proposal. So we have very clear evidence of that already. So we decided it's just basically not worth pursuing. So basically, in any decentralized space, you have good reporters like yourselves, and you have bad reporters who may or may not have other incentives. We don't know. We can never tell. But we thought it was just not worth our effort to pursue that, and we want to work collaboratively with all regulators in the world, and we want to focus on the positive energy instead of the negative energy.
CZ, thank you so much for joining us this morning and offering your insights and updates on Binance.
Thank you so much for having me. Yeah.
Great having you. All right. That was Binance CEO Changpeng Zhao. Coming up, Congressman Warren Davidson on bringing legal clarity to digital assets. Welcome back. U.S. lawmakers have introduced legislation that aims to provide greater regulatory clarity on digital assets. The law creates a working group to include representatives from the SEC and CFTC to address issues such as whether a cryptocurrency is a security or commodity. Joining us now is one of the authors of the bipartisan bill, Congressman Warren Davidson in Ohio. Welcome, Congressman.
Good morning. How are you?
Good morning. Very well. All right, Congressman Davidson, lack of regulatory clarity in the face of rapidly developing innovation is a constant tension in the digital asset space. Ether and Ripple launched during the ICO boom, and in one case, Ether, they were determined to be a commodity, while Ripple is being sued by the SEC as an illegal security. So does this legislation aim to remove that confusion? Is it enough?
Yeah, I think without a nod towards any particular entity or token or digital asset of any type, we should have a bright line test. Someone should be able to know at launch or at any point whether this looks like a security, a commodity, or something else. And that's the goal of this Eliminate Barriers to Innovation 2021. Patrick McHenry, who's the Republican ranking member of the Financial Services Committee, led the effort. And Ted Budd and I on the committee are co-sponsors, and we're hopeful that we'll get this through and get some of the necessary work done between the Commodity Futures Trading Commission and the Securities and Exchange Commission.
Good morning, Representative Davidson. Are you hoping to encourage growth of digital assets, or are you trying to regulate them? Is it to help or hinder crypto?
Well, both, frankly. So, some of you may be more familiar with my Token Taxonomy Act, which has been around since the end of 2021 or the end of 2018, and reintroducing this here in 2021 as well. And what that does is it actually just skips the study. We feel like we've already done the research with industry and some regulators, and we define a digital token as really part test. So it would replace the Howey test by saying, hey, if you meet this criteria, this is not a security. So we've got 4 components. It's already created. It's not a promise to create them. It already exists. It's no longer controlled by the creator or a central authority. And it's transferable. Therefore, it's transferable without an intermediary. It's destroyed on it. It's stored on an immutable distributed ledger, and then does not represent a financial interest in an entity or company. So if you look at Ripple, that's the parent company. They tried to create this thing called XRP, and the question is, how many degrees of separation are there? Does a central authority still control it? Does it meet that test? If you assess that and said, hey, it falls on this side of the test, then you could say, oh, no, that's still a security. If it falls on the other side, then you could say, all right, not a security, and you'd have regulatory clarity. And that's the thing the space needs, is clarity, not no regulation, but a light touch to provide certainty.
Has there been internal resistance in Congress to the Token Taxonomy Act? And if so, what is the source of it?
There's internal resistance to just about anything in Congress. But yes, including the Token Taxonomy Act, it's really not a partisan issue in Congress. It's really, in my view, whether you actually understand the issue or not. There are a few people who understand the technology correctly, and they just view that anything that would move money or currency should be controlled by a central authority, which is inherently at odds with the logic of the space. But blockchain broadly, as you talked about, keys and other innovations in the space, doesn't truly represent just a way to move money or a store of value. You're going to see all sorts of things tokenized. And, I think we're in the early days of blockchain, the same way, we haven't tapped all the use cases for internet technology. We haven't even begun to tap all the use cases for this technology.
So speaking of resistance to things going on in Congress, of course, the stimulus, the $1.9 trillion stimulus just got passed, extremely popular in the polls, even with Republican voters. Why aren't you getting through to Republican voters? What exactly is happening with messaging? Are you guys focused too much on, let's say, Dr. Seuss and not on budget issues?
Yeah, I mean, you look at what captivates attention, and I think one of the big reasons that you've seen the run-up in Bitcoin and other assets. It's the same reason you're seeing run up in, frankly, everything but cash. I mean, I think Ray Dalio coined the phrase "cash is trash" or resurrected it or whatever. But look, federal government has essentially created $6 trillion US, which dilutes the value of all the other dollars. And I say created it, or it counts as debt, but there's not a true lender here for this. And so in a 1 year's time, $6 trillion extra US is diluting the value of all the other dollars. It's not going to end well. And that just doesn't register with people. I think a lot of people are focused on more free stuff for more people and not how we're going to pay it or how it has other impacts.
But what's happening with messaging?
Thank you so much for joining us.
Oh, sorry.
Thank you.
Thank you so much for joining us, Congressman. Appreciate your time and your efforts in trying to update 100-year laws to the new world of digital finance.
Yeah, we look forward to it. Thanks for covering it.
All right. That was U.S. Representative Warren Davidson. Coming up, Markets Check with Diginex and checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello, Nick. Good morning.
Hey, good morning.
All right, so we've got this 1.9 trillion stimulus headed to President Joe Biden's desk. When do you think it'll be signed?
So it seems like it'll be signed probably by tomorrow. And then I believe the Treasury Department's already working to figure out how it's going to disperse the $1,400 stimulus checks, as well as implement the other provisions of the law that was passed yesterday.
So, Nick, you've been kind of getting into the weeds of the NFT market and looking at kind of all the crazy shenanigans that are happening, like people stealing other people's art or minting other people's tweets. What have you discovered in that process?
Yeah, so this seems to be a thing now. And to be clear, like stealing art is not at all a new thing. People have been doing it for a long time. A digital community that I moderate has an issue where people steal art to sell T-shirts. But NFTs have become kind of this latest form factor to do so. And it's obviously clearly angering a lot of artists who, pretty clearly do not want their they want to be able to tweet art out in peace and not have to worry that, some crypto person is going to sell a tokenized version of it. There are existing laws that may help address this. So it's really going to be up to the platforms, I guess, to kind of figure out how do you want to deal with it. Tokenizing tweets or tokenized tweets has a Twitter account, and you can file for a takedown if someone uses that account to tokenize your art. But you have things like the Digital Millennium Copyright Act, I believe it's called, DMCA, where you can just if you have the copyright to a piece of art, you can tell the platform, hey, this is my art. Whoever is tokenizing it does not have permission to tweet this out or to sell this, and see if they will take it down for you.
By the way, Nick, speaking of theft, we were just talking to the congressman about the stimulus package in Congress. Have you heard from any other congressmen about the implications for crypto?
I haven't really heard anything from Congress specifically about the implications for crypto. I know a lot of folks expect that this is going to be, good for Bitcoin because, more money equals more money into Bitcoin, or alternatively, more money equals more loss of faith in the central bank, which equals more money for crypto. I think it's too early to say what exactly is going to happen. This idea of, inflation, for example, has been kind of this boogeyman for a while, but the Fed's basically Fed Chair Powell was practically out there begging for a little bit more inflation, and it hasn't happened yet. So I think we're going to have to just wait and see how long this is going to, whether or not in the long term this has a material impact on, inflation and money printing, or if people take these checks and say, life resumes to, as it was with no, major impact.
Great. Thank you so much for the update in DC, Nick.
Thank you.
All right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. All right, next up, Singapore-based Diginex is the first digital asset group with a crypto exchange called Equos to publicly launch in the United States. Joining us now to discuss the crypto markets and more is Diginex and Equos CEO Richard Byworth. Welcome, Richard.
Hi, Christine. Good to see you.
Good to see you. All right, Equos recently launched ETH perpetual futures, and more recently, you have a special announcement about creating your own exchange-based token. Maybe you could elaborate on a bit about that and how you hope to differentiate yourself and set yourself apart from other exchange tokens out there.
Yeah, it's pretty exciting. The white paper is launching on Monday. We are the first NASDAQ-listed company to effectively launch our own token. We are not selling the token, so it can only be earned, which is a little bit of a head nod to Bitcoin. We think that Bitcoin is obviously an amazing asset. We wanted to replicate some of the better attributes of Bitcoin for this token. So there are only 21 million of the token. It has a regular supply schedule of reward blocks, which is effectively one a day. And every 90 blocks, the supply of the tokens halves, and this goes on for a 2-year period. So participants in the token early are the people that get rewarded early the larger amount. And the only two ways that you can earn the token is by trading on the platform and by staking those tokens on the platform. So every day, the reward will be split between staking, obviously a reference to DeFi and the industry that we're seeing burgeoning there, and then trading and effectively what we call proof of trade. So your trading and activity on the platform rewards you in the Equo token. And it has various...
Is it a centralized? Is it a centralized token? And
it's a ERC20 token. So it's effectively just with utility within the exchange. We effectively allow for rate reduction, yield increases on assets that you hold on the platform. The token can also be used as collateral for derivative trades. But the token actually, we call it the Equo, EQO origin token, and that allows you to have airdrops of any future token that we do within the Diginex ecosystem. Diginex itself is a much broader company than just the exchange Equos.
So speaking about trades, with the ETH perpetual futures that you just launched, how much volume are you seeing, and what kind of leverage are you offering traders?
So leverage, it's more a function of the collateral that people put down. So we allow for people to really run leverage to quite a high degree, but there's minimal amount of positioning that they can do to
how
that
high a degree. How high a degree?
It goes to around 100 times, but the position sizing is quite small.
And then how much volume have you seen so far in these futures?
Yeah, look, it's starting to pick up. Across the platform, we're a fairly early launch platform. We're doing about $10 to $20 million on the platform per day at the moment. We don't market make on our own platform. So a lot of the volume is very organic. So we're not trading against our customers, as you see in many of the other venues. We're the early stage of our growth. We did list on NASDAQ, obviously, early in the process. We're rather excited about what this new token is going to bring in terms of volumes.
Got it.
So we're seeing a lot of pressure on Ethereum right now, congestion, high gas prices, just generally being kind of difficult to use. Do you think that ETH can kind of handle this boom, or are we going to see, another blockchain come and unseat it, basically?
Yeah, I think it's a very interesting comment. And I, for a long time, wasn't the biggest fan of ETH as an asset. I think that what's changed is that they've obviously started to talk about doing the effective burning through gas utilization. I think this is going to actually be something that really moves ETH upwards. I think we're going to see a seismic move in ETH this year. So I think any pullbacks that we're seeing, I think these are just buying opportunities.
Can you give us a range? Where do you think ETH will hit if you had to predict?
ETH, I'm not so firm on. Bitcoin, I have very firm views. But ETH, I would imagine that we'll see it well north of 3,000 by the end of the year.
Have you picked up any lessons from BitMEX's issues regarding liquidations over the past year?
Yeah, look, we make sure that the liquidation process is very fair and very liquid. We actually invite secondary market makers to provide liquidity into the pool. The liquidation program is, we don't make any money off it, just the transaction fees. So for us, it's because we don't market make on our own platform, we act effectively as a regulator on the platform, make sure that nothing's being manipulated, as you've obviously seen with other platforms that can see where liquidations will get triggered and will push pricing to those liquidation areas. But obviously, I think that's the differentiation of having one of these exchanges that acts more as a regulator as opposed to a market maker.
Great. Thank you so much for the update, and congratulations on the EQO token launch, Richard.
Thanks so much. Great to have been here. Thank you for inviting me.
Great. Of course.
Great. Right, that was Diginex and EQO's CEO, Richard Byworth. All right, time now to check in with Crypto Twitter with our tweet of the day. And this one coming from Ben Mesrich, author of Accidental Billionaires, saying, every Bitcoin millionaire and Bitcoin billionaire is self-made. That's part of the reason the old guard hates on crypto so hard. Walls are coming down. All right. Thank you so much. That's it for First Mover. Coming up tomorrow is special guest Anthony Diorio, entrepreneur and co-founder of Ethereum. And Beatbull will be here, hot off the big Christie's auction of his digital art NFT. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Lawrence Luton, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.